Good morning, everybody. Thank you for joining us for our webinar, Give Customers Ownership Through Tech, Reach, and Optimal CX. I would like to say a really quick thank you to Reuters for putting together today's event. For those of you who don't know me, I'm Chris Frankland. I'm the founder of InsurTech 360, InsurTech Innovators, and I'm the Chief Innovation Officer with CareBridge International. I'm a global thought leader, mentor to startups, and I've spent my entire career building products and solutions that leverage people, process, technology, and data to reimagine the customer experience. As we know, over the past few months, there has been a lot of conversation about the customer experience. The pandemic really shone a spotlight on a lot of the frailties and friction that currently exist across the insurance value chain. And as companies, we're faced with an urgent need to respond to those customer expectations, delivering better transparency, better customer service, and really just an overall desire to see a more seamless insurance experience. Technology has really opened the door to providing customers with far greater control over how to drive their own customer journey. Self-service solutions enable us to pick and choose how and when we want to interact. I have with me today an absolutely fantastic panel, bringing together a wealth of knowledge across innovation and technology. And we will be diving into what it means to provide the customer with greater control over their customer journey, how technology and self-service solutions can be leveraged to increase retention and also to reduce loss ratios. We will also be looking at how technology can be leveraged to drive internal efficiencies, provide a better employee experience, and standardized capabilities across the business. So joining me today, as we discuss all of the above, we have SG, the Vice President of Innovation and Digital at American Modern Insurance Group, Philip McCriskin, the CEO at Vitesse, and Uthra Ramanujam, the Vice President of Strategic Technology Research at State Auto Insurance Companies. I would like to remind everybody listening that please line up your questions via the Q&A app, and we will get to those at the end of the session. So, Uthra, starting with you, I would love to get your thoughts on how we can kind of give the customer more control over their customer journey. So I'll hand over to you, introduce yourself, and be happy to hear your thoughts.
All right, thank you, Chris, and good morning, or hope everybody's having a great day, whatever time zone you're joining in from. As Chris introduced, Uthra Ramanujam, I am the VP of Strategic Technology Research at State Auto. My experience in the insurance and finance world has been about almost 20 years. I'd like to joke, I started when I was 3. Jokes aside, the job that I do touches upon a lot of what I think this specific webinar is about. And what I mean by that is data is everywhere. So how do we make use of the data that is coming in from all those different channels that our customers are using? It could be internal customers, external customers, it could be other businesses. My experience in this field has been one of constant learning because no two modalities are the same. So the way a customer interacts on the phone is not the same as they would do on a web application, and that is not the same as a mobile application. What we have learned in our journey across these multiple different iterations is it always depends on which specific workflow of the customer you're interested in. And to hone in on the word customer, specifically what type of you've all probably heard the word persona. So which specific persona are you interested in? After all of that, there's obviously the technology component. What we have found is it's less about whether you use technology A or technology B. It's more about what are you trying to accomplish. So that's a lot to throw at you, but what has worked really well for us is to start small. Less is more. Start with a specific type of customer you're dealing with. Really try to understand which channel do they engage in the most, and really start with, one or two different, I use the word KPI rather loosely, but what is the one or two things that you want to learn? Are you trying to look for pain points? Are you looking for maximum engagement, retention? What is it that you want to learn? And then start there and continue to build on it. I would say don't try to boil the ocean because you're going to get lost very quickly. So that's been our experience, and I think it's worked well for us. We learned very quickly what was working for our customers, and we learned just as quickly what was not. So that's been my experience, and I'm looking forward to some good questions from this webinar. And without further ado, I'm going to tag SG to introduce himself.
Thanks, Uttara, and thanks, Chris, for kicking us off, and also thanks, Reuters, for organizing this webinar. Quickly, let me introduce myself. My name is Sudhindra Galgali. I go by SG. I head up the innovation and digital strategy here at American Modern Insurance Group. We're located in Cincinnati, Ohio. I'm also the overall business sponsor for our digital transformation program. I've been with American Modern for 6 years. Prior to that, I was primarily, I have primarily a technology and a strategy background in various industries like technology, healthcare, and services. So point to be noted, before American Modern, I did not have an insurance background. So unlike Uttara, I am a newbie on the insurance side. A little bit about American Modern. We are a personal lines P&C carrier, part of the fully owned by the Munich Re Group. We write specialty risks in the home and auto segment. We underwrite risks that a standard carrier generally does not have an appetite for. These include things, vacant and rental homes, mobile homes, homes that have a high risk profile associated with them. And then on the auto side, we write recreational products like collector vehicles, boats, yachts, motorcycles, ATVs, etc. Because of the kind of risks that we write, our business model is a B2B2C model with multiple distribution channels, including independent agents, GAs, MGAs, as well as standard carrier partners, which we call strategic alliances. For example, Allstate is a big strategic alliance of ours. We also have some program partners, notable being our pet health offering. In respect to this particular webinar and the topic of customer experience and customer transparency, just a little bit of a history of where we have been over the past 6-7 years. We have invested significantly in transforming our business. This includes moving off of our legacy technology platforms to Guidewire as our single core insurance platform. But at the same time, just like as we have modernized the technology stack, we have actually revised and consolidated our products across the spectrum in a new legal company and streamlined our business processes and structures to align with this new way of doing business as well. In short, over the past 6-7 years, we literally have reinvented ourselves as a new company. And that provides a platform. So as we finish this transformation here this year, we are quite well positioned for a digital transformation for our customer experience. So it provides a platform for our customer experience. So from that standpoint, and then Chris mentioned this a little bit earlier, as the world has changed over the past few years, obviously in the past 18 months with the pandemic, but the insurance world has been changing. For the past 5-6 years, with the whole insurtech revolution and the digital acceleration that is going on, it is imperative that carriers like ourselves and others step up to deliver on the customer expectations, which are now transcending industries. So customers expect Amazon-like experiences from all their services, and insurance is not an exception. As these digital experiences proliferate, there's this inherent trust issue tied to accuracy and ubiquity of information, which drives the need for greater transparency and communication. So for example, customers are used to experiences like the Domino's pizza tracker, which I'm pretty sure many of you are familiar with, as well as the Where's Your Parcel Now feature on Amazon. I'm pretty sure we all stand at our doors waiting for that Amazon Prime vehicle to show up at their door at the exact moment that they say it's going to show up. So these and other digital experiences have established a bar for instant gratification, and customers expect similar transparency of information from insurance services as well. However, insurance, as we all know, is traditionally looked down upon as that necessary evil, right? And if you, which has inherent trust issues associated with that. There's always this lack of transparency perception that categorizes insurers as the bad person in the room, as the bad guy. However, the new age digital capabilities enable us insurers to deliver customers, where, how, and when they want their information. This leads to a customer experience, in my opinion, that aligns with their expectations, which drives up trust and maintains that necessary engagement. So as you plan to deliver such an experience, I would highlight 3 key points to ensure that customer experience aligns with expectations. 1, design a customer journey in alignment with customers' current and future expectations. But like Uttara said, evolve it in small bites, in a small fashion, or implement that in a small fashion, because these expectations are going to evolve, and you want to evolve those abilities along with that as well. So you can't necessarily try to do the big bang approach. Second, I would say meet the customers where they are, where, how, and when they want information. So digital technologies provide us the capability to enable this true omni-channel experience that allows customers to choose their channel of choice. Keep that in mind, because that's going to be very important to deliver that customer experience and that transparency. And finally, I would say, don't put a lipstick on the pig if you're able to avoid that. What do I mean by that? Don't enable an experience that is disconnected from the back-end services. So you can't necessarily just put an interface in front that allows a great customer experience, but when it comes to engaging with your back office, whether it's your underwriters, whether it's your claims teams, or customer service, it falls through and there's a disconnected experience. It is very, very important that the front-end customer experience is connected to the back-end in a digitally enabled way to deliver that smooth overall customer experience. So with that, I'll stop and look forward to the Q&A that comes afterwards, and I'll pass it over to Philip.
Thank you, SG. I almost don't want to introduce myself. I just want to get into the chat, because it's really interesting what you're saying there, and I think there's going to be some good areas for discussion. But they told me I must introduce myself first, so let me do that. Phil McGriskin, Chief Executive and founder of Vitesse. We're a sort of fintech, instech based in London, regulated by the FCA. Prior to my time in this company, I was at WorldPay as a Chief Product and Marketing Officer and Managing Director of their Futures Business Unit. I arrived at WorldPay through their acquisition of My Business Invoice Services, which I started in 2004. That was all about collecting money around the world via different methods, nothing to do with insurance. Prior to that, I was at PaySafeCard and Earthport, both big payment companies that have since been floated or acquired. But prior to that, I was at Lloyd's of London as an insurance broker. So over 20 years ago, I used to work in insurance, and now I've come back around because I can see that there are sort of some significant issues in the industry to be dealt with, and they're primarily focused around, customer outcomes and to do with claims. So after my time at WorldPay, which was spent about collecting money off people, I understood that it was quite clear that there was a big problem with dispersing money around the world. And the insurance industry is where we've pointed our guns. Over $4.5 trillion are paid out in claims every year. And to date, the incumbent payment provider for most of these claims are the banks. And I think it's fair to say that they're offering a thin solution at best. SG, you talked about people having expectations due to sort of pizza trackers and Amazon delivery and everything like that. Absolutely. Being sent a check 2 weeks after the fact is just not acceptable anymore. And not being able to see where your claim is in the process is also not acceptable anymore. So what we're doing to try and solve to this is bringing a treasury and payment solution into the insurance market that doesn't only give the customer a much better claims payment experience by giving them sort of real-time payments and a choice of how they get their money, but it also optimizes the flow and the handling of funds that are used to make those payments for the insurer. And all of it involves peeling back layers and opening up and giving control and transparency, either at the very top where the managing agent, where the insurer is, or down to the bottom level where the customer is, who's waiting for their money and wants to know where it is. Being able to be paid directly to your Visa or your e-wallet or your Venmo account, is just, that's what should happen these days, but it's not. And that's what we're bringing to the market. My sort of specific thoughts on this, this customer experience bit are, again, agreement with USG, the insurance industry is sort of late to the table. But I think they're being driven by their customers, but also by new entrants in the market. You're seeing neo insurers that are coming up with the promise of being able to deal with a claim inside of a couple of hours. That includes having the money in your pocket. you know, if you're a big monoline insurer, you'll be losing business to these guys now, so you need to step up to the plate. And then there are different types of insurance covers that are coming out now, not just revolving around your typical, you know, my house has been broken into or my car has been stolen, but these parametric covers where you have an instant or sort of almost in advance of you filing a claim, decision that the claim is to be paid and then a payment needs to be made. And again, you know, hiding behind a sort of a paper process or a slow payment process is just going to give your customers a terrible experience, which means that they're going to go somewhere else next time. So I think that, you know, for us, this sort of transparency and speed around the claims payment gives you an optimal customer experience. The claims event is actually the shop window for an insurer. So I think for them, it's the most important thing to be getting right. And we're focusing a lot on bringing some new technology into the market to try and help them optimize that process for their sort of customers and for the claims. I think that's it for me for a little introduction. I'm going to get into the chat and see what else SG's got to say.
Brilliant. Thank you. Thanks, Phil, for your comments, SG, Uthra. All very, very topical stuff right now. And as somebody who is going through a couple of claim experiences with two different carriers, each of which are, I wouldn't even say they are, I don't know what experience they are. They aren't Amazon experience. Let's put it that way. And everything that we've been talking about, the transparency, the lack of transparency, the lack of insight around next steps is very much obvious. And you know, I feel to some extent, and Phil, I think your closing comment there about the claims event being the shop window into the insurer, into the brand, right? I mean, at the end of the day, the carrier is the brand. It's something that we need to do a better job at kind of fixing and making sure people are not managing their own claims. You know, we don't want people to manage their own claims. So I would like to, I've got some questions. I just want to remind the audience, please send your questions in via the Q&A option. We have some very, very well experienced people here with a lot of knowledge around this space. So please provide your questions. I'll start kicking off the conversation. And the first one that I have lined up is, how are insurers identifying the customer critical pain points? And SG, I might start with you, because you spoke at length about the transformation within your own company, how you're focusing on that customer journey. How did you identify those critical customer pain points?
Yeah, so when we came, as we started to come out of our transformation, the current transformation initiative, one of the things that we realized was the transformation that we went through was quite internal in nature, right? We were essentially getting rid of our legacy systems, coming up with, you know, the new technology stack. We were also revamping our products, which was really, you know, a lot of that was driven by customer and requirements as well. But as we started to look towards the future and say, how do we enable that digital experience, it was very evident that we needed to get that customer perspective. It couldn't be us sitting in the four walls of our office, essentially coming up and saying, this is what we think the customer wants, and then go down that pathway. So we realized very early on that we needed a focus on the customer. So we formed a customer experience group, which essentially focuses on, it's a consultant to the entire organization. So they put together what we call a customer experience blueprint, which is the entire life cycle of the customer with us. It has different types of journeys that have different touch points for that customer through that entire life cycle, all the way from distribution to selling, to code and binding, to servicing, to claims, to renewal, to the entire process. And that is almost, I would say, and we call it the blueprint for a reason, because that is the blueprint that we based our journeys on. These journeys, we have different areas within that life cycle that we pinpoint our specific aspects of our journey that we want to focus on. Clearly, we cannot do it all overnight, so we have to identify those what we call moments of truth that essentially are critical for that customer for that particular step of the journey at that moment in time. So to Philip's point, we started with claims, and because that is the place where the customer touch points are the most critical, and we identified these moments of truth and essentially went down that pathway that way. The other way we also do it is, so obviously the journeys came about with a lot of customer input, a lot of workshops and things like that. The other ones that we do is we have a lot of feedback surveys that we use at these various moments of truth where we ask our customers their experience. And we get a fairly significant uptake on these surveys because they are at the time when they're experiencing that particular activity. And that drives a lot of what we do as well, because that's direct customer input. The third one, I would say, is data mining. We have data from all our different customer touch points, when customers call into our call center, when our sales team is interacting with our agents, when our customers are interacting with our underwriters, various touch points, a lot of different data aspects. I wouldn't say that we are very perfect yet in terms of all the data that we have, but we have a lot of data that we try to look at and see what are our customers telling us. And that is so important because we do realize sometimes that there is a significant gap between what our customers are wanting to do or will use and what our customers are really willing to use. And that we have to narrow that gap, and we make sure, and we do that by understanding these different needs and essentially trying it out. Uttara mentioned this earlier. It is very important that we try out things, get feedback, and then essentially go back and deliver more. And so that iterative approach of delivering to market. So a lot of different touch points like that, but the basis of all of this is our blueprint and the customer journeys that we do.
Brilliant. SG, thank you so much. I think having a consolidated approach to defining the current state and then understanding what we want that future state to look like is obviously key. Uthra, I'd love to get your thoughts on that as well before we come to Phil.
Sure. SG, you covered, I think, the practical, how do you get started, how do you go? Cannot stress enough the aspect of trust but verify. Yes, they are absolutely going to come and tell you, hey, I wish you could just give me my payment in 24 hours, and I wish you could just let me not have to talk to a human and completely file it online. Just because they say that doesn't mean they do it. So our experience has been, yes, all of what SG mentioned. We've got all these cross-channel interaction data. They're all breadcrumbs, but they're all piles of breadcrumbs that sit by themselves. So one of the things that we're trying to do, we get, a mixed bag of success, is to start correlating that. Yes, I'm giving my customer the digital capability where they don't have to talk to a human, they can go all the way. But guess what? 50% of them are adopting it, but 50% of that 50% still picks up the phone and talks because they want that touch. At that moment, they really need to speak to somebody who's able to echo their feelings and sympathy and all of that stuff. So absolutely, I think you touched upon most of it. One of the things that we are starting to see some success with is wiring, and I call it wiring all of our digital interfaces where we start to capture what is it that they're doing. So whether it's in real time or day two, I'm able to exactly tell this particular customer called me and spoke to me for 45 minutes. Did they even attempt to do something online? Even worse, did they attempt to do something online? They clearly gave up, and guess what? They turned around and called me. That to me is like a cross-channel improvement opportunity, right? Was our website bad? Or, what did they not like about it? Or is it just a customer who fits the profile where they just like to talk to somebody, right? So I think it can be a messy world, which is why I would go back to my original comment to start small, because if you try to look at everything, you're going to get so many mixed signals. You're going to trip yourself up. So start with, whether it's the claim experience, whether it's a straight through experience you're trying to roll it out small, really watch and go, who's taking it up, who's not taking it up, right? And another key thing is in your testing and in your user experience, you probably say, oh, if everything goes well, this claim should go from reporting to a payment being issued, I don't know, I'll make up a number, in 10 hours. But on average, does it really take 10 hours or is it still days? If so, why? Is it us? Is it the customer? Is it just our third-party provider who has to finally give us that check, right? So it could be a lot of different things. Claims is typically where we start as well, because I think that's really where the customer is in need. And if we're going to have a great experience, that's probably a good place to start.
Thank you. Some great points there, and I think you hit the nail on the head with the compassion and empathy part of that claim journey, right? Knowing when and how to reach out and engage with people in that claim journey. And I think, Phil, coming to you, this your role is critical here, right? When we think about chasing up payments, when am I going to get paid for the claim? That shouldn't be the burden that the insured or the customer has to follow up and keep tabs on, right? I mean, and I think this is where, thinking about parametric models, thinking about just even basically, basic payment, getting paid for your claim, right? I mean, these, some of these are quite low hanging fruit that we can solve.
Yeah. I mean, I think, I sort of agree with everything that's been said on this subject so far. I think, the very simple answer is by paying attention to the customer and then focusing on the customer outcomes. But Uthra, to your point, the customer might say, I need my money in 10 hours, but there's something stopping that from happening. So you've got to wire all those processes in and go all the way back up the line. So it might not just be the payment event. There might be something in the treasury that's stopping it, or something in the claims processing bit that's stopping it. And I think that looking at things in isolation doesn't work. So you have to sort of look, you need to bite off manageable chunks to fix it, but you've got to look at the whole process in order to understand where it's going wrong. I think one of the big things that the insurance industry can be doing, and only because they are behind the 8 ball on so many different things, is sort of looking around different verticals and seeing what other people are doing with some of their customers, just to try and break the mold. Take out the very thing that insurance think might be most fundamental to sort of getting a claim initiated or paying a claim, seeing what you can do without it and seeing if that transforms it and change it. You look at businesses like TransferWise, or now Wise, and what they've done to the money transfer industry. Or we've got a business here in the UK called Kahoo that sells cars online, and you can buy a car online and have it delivered to you in the afternoon. A new car or a second-hand car. I mean, it's, these are transformational services and things that I think, had you not really pulled out the fundamental plug that you thought underpinned the whole thing, you wouldn't be able to do it. So I think you need to sort of think right outside the box. You've obviously got to watch your customers. You need to bite off manageable chunks, but you've got to make sure you plotted out the whole thing so that you know what bit you're fixing. And then the other thing, I don't know how prevalent this is in insurance and whether it's even sort of possible to do, but on the payment side of things, and I guess with a lot of other products, especially as you move online, but you can do this offline as well, is A/B testing. Can I treat some customers some way and some customers another way, and see which one's got the highest retention or which one's going to pay me the most premium? I think, I don't know how much of that goes on, but from what we see, there's not a lot.
I think, and SG and Uthra, I'll let you chime in there. And I think there's a lot of opportunity, right, to use technology in a way where, we are seeing this in the industry, or I think we're starting to, where we're starting to see automation, or some level of automation for claims that perhaps fall into a more straightforward bucket. And I think, Phil, with the payment side, being able to create that kind of seamless end-to-end journey with an automated payment, wrapping it up. Yeah. Perhaps there's a way to segment those claims from the ones that are more complex in nature, where to your point earlier, Uthra, maybe there's more compassion or empathy needed, more customer touch points involved on that journey. SG, I mean, how are you guys kind of differentiating then, how you use technology versus how you use people as part of that claims journey?
Yeah, very, very good question, actually, because I remember very clearly a few years ago when we were starting to think about how do we digitize the claims operation, the whole concept of straight-through processing, and especially being the kind of insurer that is not a standard carrier. So our claims and our risks are not the typical cookie cutter kind of activities. How do we go down this pathway? Because and what targets do we set? Because Uthra mentioned 50%, and we were like, is 50% even the right number for us? Because our claims, by definition, are there are more claims that are, much significant ones, and the risks that we write are also very unique. So how do we do that? What kind of balance do we have? Do we need to have? So when we literally had to segment our claims, we needed to look at different types of claims that we have. We needed to look at what processes do these claims follow once we get a claim reported, and what does that mean for us. Now, there are different ways you can slice and dice this, right? If you look at a typical claims life cycle, there is reporting of the loss, there is data collection, there's adjudication, and then there is the payout or the denial, the decision. But certain claims, like in our case, we have renters that we cover. If you have a theft claim for a renter, well, that can fairly go through the whole straight through processing fairly quickly, because there are certain questions we ask, there are certain thresholds we can set, and boom, it can be done fairly quickly. But if your house is burned down, or you have almost a total loss, and your home was somewhere in the middle of nowhere, which is what the kinds of homes we write, well, we can't do straight through processing at that point. So we have to get a human involved. So we made a very deliberate decision that our claims operation, because being a specialty, we have a lot of knowledge, a lot of specialty knowledge that makes us stand apart. Our claims operation is one of the highest rated out there. So we wanted to maintain that advantage, that relationship that we had with our customers and the knowledge base. So we made a very deliberate decision that we will digitize where digitization makes sense, but will complement that, or we will complement the digitization with our expertise, with the human expertise that we have, but do it in such a way that it is seamless from the customer's perspective. Because what we don't want is the customer getting two completely different experiences and having to repeat a lot of information, having to go through the same steps again and again. So we, and that's where the 4 steps of the claims lifecycle comes into picture, where we said, for a house that's burned down, it's probably okay. They could probably report the loss online, but they're mostly not going to. They are going to pick up the phone and call us, because at that point, it is that empathy, it is that compassion, it is that emotion that is really at play. But all other types of losses, they could potentially report it online. But as they go through the process to final adjudication, right? How do we maintain engagement with the customer? That's the other part of it. So when Philip mentioned the payment piece, in my opinion, payment is the last step of the process. But how do we keep the customer engaged from the time they reported the loss till the time the payment is done? There is a time gap in between. And if you're not doing straight through processing, because you need to inspect, because you need to get an estimation, a lot of that stuff, how do you keep the customer engaged? So getting that communication with the customer in a fashion that is seamless is also important. So the customer is aware that you're working on it, and there is, there's progress happening. So I would say, it was not necessarily a, we sat in a room and said, okay, this is what it is. We need to do 100% straight through processing or automation. It was literally considering, what types of claims you get, what are the customer implications, what are the customer emotions at play, how do we, mix and match this. But the one thing that was clear is the customer's experience needed to be seamless. On the back end, we would basically do what was necessary to handle it, but the customer's experience should be seamless.
Thank you, SG. Phil, any comments there? Any thoughts to add?
No, I mean, I sort of agree with what SG is saying. I think, that payment piece is a sort of crucial bit at the very end. I mean, we've paid claims. If I give you examples of claims that we've paid, just sort of, because we work with Lloyd's of London, so we do little and we do large. I mean, we've paid £3.75. This is a true claim to a prisoner in one of Her Majesty's prisons here in the UK. And that was for Capita, who are one of our service partners. And this particular individual felt that his box of cigarettes had been damaged during the arrest process. And here in the UK, the laws are that equitable that he was allowed to file a claim for it. So we paid a claim for him, and we sent a paper check off to a prison in the UK for him. But in the same week, we also paid a £7.5 million claim for an oil spill in the Gulf of Mexico. The claims were handled completely differently, but by the same organisation. And it's because you have to do it differently depending on what people need. Just take the payment angle out of it. It's about what they want. I think obviously the prisoner is probably not such a good example because customer service and his satisfaction with same was probably not the ultimate goal. It was just to get it out the door. But in terms of the oil spill thing, you know, it's about giving the customer a window into what's happening. Some claims are going to take time, and you can't automate everything, and you can't have straight through processing for everything. You definitely don't want customers phoning you up asking what's happening, and you don't want to phone customers telling them what's happening. So it's about peeling it back and giving them some visibility. And it can be quite anodyne visibility. It doesn't have to be this thing's happening at this very second. When I used to do work well, we worked with TransferWise, I've worked with Airbnb, and for these guys, when they're getting money back out, quite often it's just a couple of different stages. You're at stage 1, you're at stage 2, 3, and 4, and that's enough for a customer to know. They don't need to know Bill Smith has done this and he signed off your policy. You're now going to have, you know, the second clause examined, but it's just giving them some visibility and confidence that it's moving through the process in the organization can be enough. But you have to give them. It's transparency for them. It's giving them something, a window into what you do.
Yeah, no, that's a great segue into this next question. And Uthra, I'll come to you so you can make a comment on that, and also on this next question. So, you know, I use my claim as a good example. So, you know, I check the claim status on the website, and it's open. Great, you know, the claim's open, but I don't know where in that open journey it is, and invariably I'm picking up the phone, speaking to 2 or 3 different people. It could be the adjuster, it could be the agent, or it could be the carrier. I don't know where I am in that process. So it's, you know, I think transparency, and to your point, Phil, I don't necessarily need to know the really granular stuff. I just need to know where it is, you know, where is that claim in that journey. So, Uthra, you know, we have a question around, you know, how does a transparent customer journey lead to an improved customer experience? And I think we've heard good examples of it there, but you know, generally would love to get your thoughts and feedback.
So I'll give you 2 stories, and I will make a desperate attempt to move away from claims because there is far more to the left than a claim, and every insurer's dream is to not have a claim on that policy. So I'm going to try to live that dream. So I'd like to give an example of what you just said. You filed a claim online because you don't like to talk to somebody at the end of a 1-800 number. Great. Okay, now what, right? So one of the things that we did on our digital claims experience is really put some, what we call as ability to capture some data crumbs on what is it that they click on after they've just filed a claim. What is it that they click on day 1 of the claim? Right? That typically tells me what is it that's worrying them. Believe it or not, the biggest question that they click on is, I just filed a claim, is my premium going to go up? I would do the exact same thing because everybody's worried about that. So when we tracked that and we started getting the data, we caught that. The other thing, which was, I just filed a property claim. Is an inspector going to come look at my property, right? So those are the questions that are weighing heavily on people's mind. So capturing the data is step 1, right? We also found that there are certain customers. So when you talk like a big weather event, right? There are thousands of properties that get impacted. People get very worried when, say, for example, their house burns down or their roof blew off because of that tornado that just landed. They're going to get in there and check on the status of their claim often. So we found customers who were getting in and out of our app hundreds of times a day. That tells you that they're very anxious. That to me is a good trigger where we go, that's a good indicator where we should pick up the phone and say, hope everything's okay. We got you. We're running behind. Here's when we're going to get to you, right? That to me that's where the human has to step in. You can give them the slickest app. I can give them a claim pizza tracker, but that human touch is important because I know they're anxious. So that's one story. I like to talk about the AB, Philip, that you brought up, where insurance, banking, finance is all complex, right? We cannot do anything that is even remotely disparate treatment, bias, discrimination, like everybody's watching us like their life depends on it. One thing that we did test out was, and SG, I think you mentioned all of your business goes through B2B, right? We're in that same boat. We cannot watch what our agents are doing. There's no way I can put a camera or put a tracker on their system. So what we did find out is there are certain types of business where they abandon a quote when they're on the payment page. So we go, so they obviously came all that way, which means the quote I was giving you was something that was amenable. What made you drop, right? So we put some breadcrumb trackers on that page, and we found out that this is painful because of the method of payment I'm asking you to do, which is probably not convenient for the target audience in mind. We go, aha, that's a light bulb, right? So we kind of wired it to go, why don't I pick a small subset of agents who I know write this type of business and change it up? Let's see what they do. Do they bite more? Do I get more conversions? And that will tell me what's going on. Doesn't always work, but that's kind of the closest we get to A/B, right? Without introducing any kind of discrimination. Is how can I use the data to guide me to go, is this a website problem? Am I putting too much information? Or is it a payment instrument? Or is it the fact that I don't give them different monetary financial options to pay for the premium? It could be anything. That's really where I think data becomes important. Customer experience automatically gets better. There's a lot going on if you could, like I said, right, laser focus on the one thing, and you can get a lot out of it.
Yeah, that's awesome. And thank you for those examples of how you are kind of understanding the customer journey and those customer actions to help drive those next steps. Or I think that's really interesting. And SG, you made the point earlier about how you kind of around data mining and using data to make better decisions around the customer experience. So I've got a question from the audience, the listeners, that I'd love to put out there, and please keep questions coming. Lynn has a question around when a new policy is written, are you capturing what type of communication style a customer anticipates? She says for the claim, but I would say for the whole journey. I mean, so are you capturing that up front, or are you capturing anything around that type of communication preference? SG, let you.
Yeah. So yes, we are, but I say that with a slight asterisk around it, because historically we have not. Because historically, I don't know of any carrier, at least I can speak apart, but I think it's the same thing everywhere else. They're not that customer centric. So we were more, like what we would just collect information that we needed to underwrite the policy, to make sure that we got the right risk on the book. And then when the customer called us for a claim, that's when we would collect the information necessary to do that. That was historical. So a lot of the legacy book that we currently have, usually we don't have that kind of information. However, things are changing. So to the question, yes, we are starting to collect that kind of information, not just at new policy, but also at different touch points with the customer. Because like I said, for the legacy book that we have, we do not have the right kind of information. And more importantly, especially, because we are in a B2B2C model, our agents, usually there's a little bit of a issue there, because they look at the policyholder as their customer and not our customer. So we end up having phone numbers and emails that actually belong to agents and not to the actual policyholders. So we have to educate the agents to basically let them, so that they can understand the value of what it would mean. So if I am collecting the information, the opt-in information, the mobile information for the policyholder, and if I am sending them a text message about their claim or any part of their policy, the various policy events that occur, it's actually helping the agent, because the customer is not picking the phone and calling the agent about those things. But that is a journey. So that education is an important part of this too. So we are obviously starting to collect all of that information now at various touch points, not just at new policy, I would say.
SG, do your agents not get worried about disintermediation on that? I'm not an agent, I'm not an underwriter, but I could see them saying, well, that's why I'm not giving you the details, because I want to sort of give them the range of insurers that they can choose from next time. And does that complicate matters if it is the case?
Yes, it does. Because, like I said, again, these agents we do not have captive agents, so they're not employees. We work with agents, so they're all commission partners, and they're great partners. We have a fairly significant network of these partners. But these partners, at the end of the day, right, each agent is a small business. If it's an independent agent, and there are some large general agents and MGAs as well, but they all are, have this local business and the connections to their customers. And so they pride themselves in, rightfully, in having that relationship with their end customer, their policyholder, and those relationships, and those are important for them. So, so it's not, I don't think it's necessarily saying, hey, I as an agent can give you the best, option with different carriers. Usually that is not the case, right? Especially for us, because we are not the standard carrier. So we do have a significant retention here because we are a specialty. So customers continue to renew with us. Yeah. It is more about that relationship. It's more about that connection, because the disintermediation could be that if I decide to go direct, right? If I am a carrier, decide to go direct, which, from our perspective, we don't, our agents are our distribution channel. So there's no intention for us to do that, but that's always the fear. So that is that balance. And somebody mentioned, I think you mentioned the InsurTechs, right? Early on, there are new InsurTechs that are changing the model, like Lemonade, Root, they are going direct to consumer. But what I hear recently, in fact, I heard it at InsurTech Connect last week, some of these are actually starting to now look at the agency channel as the way to continue the business, because the B2C, went up and then kind of leveled off. So the agency channel is what they are reverting back to say, okay, how can we deliver a similar experience through the agency channel? So the agents are still very relevant. We just have to make sure that we interact with them in a fashion and communicate and educate them in a fashion that helps them understand that this helps both of us. So we have ultimately both of us service the same customer.
No, thank you for that. It's interesting.
Yeah, that is
one
really
additional
interesting.
thought on that, Chris, and then I'm smiling when I hear SG talk about this. We probably are a tad ahead of you in that life cycle. I think we totally know what you're talking about. Couple of things to think about is, yes, they absolutely take pride. The independent agents, we work with independent agents as well, not captive. They take the pride, and that's exactly why we want to do business with them, because they're these community placeholders that bring in people. They know exactly what folks want. Couple of things to think about is part of incentivizing the agents is to say, hey, did you know that if your customer filed a claim by themselves, on an average, they can shave off X number of days before they get a payment? Because guess what? The insured or the customer is at the accident site. He or she can all have smartphones. You can take a picture and upload the picture, which is far more complicated if the agent has to file the claim. So there is definitely that aspect to it. And again, going back to understanding through all of that breadcrumb data is to say, yes, we can keep telling them, we can incentivize them, but can I track to see how often is a claim being filed by the insured directly versus the agent? And to go back to the question on the chat, right, I think it's absolutely important to do it at the time of writing the policy, but every possible touch point you have, it never hurts to say, I'm just calling to say, hey, I don't remember when my next payment is due. Can you tell me when it is? The first thing you could ask is, hey, I have this number on file. Is this still an accurate number? People move. I mean, we've all seen 2021 was the great year of Exodus, where everybody moved everywhere else, right? So that's one. If nothing else, at the time of filing a claim, please make sure who you're talking to, because if I'm injured and I'm not able to handle my claim and my spouse has to do it, that's probably the contact you want to have on file. So it has to be a continuous evolving thing. And I think that's the right way to go.
Ithra, you said you wanted to move away from claims, and I'm sorry for asking another question about claims. I know nobody ever wants to pay a claim. Do you guys, it's the shop window, do you handle them yourselves, or do you use delegated claims handlers, or do you use a sort of mix depending on what claim you've got coming through?
I think it's a mix, and the mix is typically driven by the year of the month of the year. We typically have high volume seasons, and if we have a lot of customers in the southeast and it's hurricane season, we probably have temp staff who come in and help. It totally depends on what
your own temp staff or
yes.
Yeah. Okay.
Yeah, something similar for us as well. We have our claims team, field team, that does most of the claims ourselves because of, like I said, we are the specialty risks. So we have collector vehicles, collector cars, these special homes and stuff. But we also have variable or flex staffing related to cat. So when there are cat seasons like hurricanes and that occur, then we have to, supplement that with some flex staffing. But generally, yeah, we do our own claims.
And is that just in terms of sort of peeling back the layers for the customer and leaving it open? So you guys sort of prefer to have it in-house. Is that the way that it works in the US as much as possible, or less so, or it really depends on a case by case? And the reason I ask the question is, I mean, here in the UK, it seems quite prevalent that people outsource claims management as much as possible. The underwriters focus on underwriting and keeping the premiums tight and doing the bit all to the left, Uthra. But that sort of claims bit, quite often they'll seem happy to give it away, which to me seems a bit risky given that it's your shop window. But then if somebody's really that much better at doing it than you are, then maybe that is the way you should go. You guys?
Quintessential, it depends answer. I think depends on the company size, the type of risk, the type of claims they get, because some are just so specialty, you do not want to outsource it. If you do cookie cutter auto only, then that makes sense. It's the whole outsourcing model. Right. How simple and repeatable is it to the point that you don't need to keep it in-house?
Yeah, okay. Now, if I look at the ones here in the UK, it is typically your more, I guess, commoditized claims that are being shoved out to, okay. Thank you.
Thanks, Phil. Thanks for throwing this. So another question from the audience, and this kind of ties in with the question that I was going to lead to, which is, what can be done to kind of ensure greater transparency and give the customer more control? And are there tools and technologies that you're using to help do this? And I'm just going to tie this in with a question that we did get from the audience as well. Have you found tech helpful to triage for CAT? For example, a claim that absolutely needs an inspection versus a claim that can be done virtually. So kind of a technology play on that question. And SG, I'll let you have a crack at it.
Yeah, so I can have a very long answer on this one. Keep it short.
8 minutes to go.
So I know. So I'll just give you a couple of examples on this one. So on the CAT side of things, we are starting to leverage some of the aerial imagery and the AI on it to help us guide how we handle our claim, how we deploy our claims adjusters. But we have to be a little bit careful with that, because there are times when it becomes very helpful when nobody's allowed to go in a CAT location, right? They're still triage, they're still looking at that. No human is allowed to go in. At that point, aerial imagery through drones or through low-flying aircraft, things like that, that helps, especially on the residential property claims that we have. So there, we do use some of that to help do some deployment planning, if you will, of our claims adjusters. But then on the flip side, we are starting to play a little bit, or we have piloted a few of those solutions of DIY capabilities, where we essentially ask our customers to take pictures and images that could be self-guided, or it could be guided by the adjuster to capture some of that information. That we have had limited success with that because we have to, if the adjuster is still spending 45 minutes trying to do that with the policy holder, then we are like, okay, and then the adjuster still has to go out, field adjuster has to go out if they have to climb on the roof to look at the roof data, then it kind of defeats the purpose. So so there is a little bit of work to be done in terms of understanding what technology works best, and which is why I said earlier, I don't think there is one solution that fits all. We literally have to evaluate these technologies, and more importantly, these technologies are significantly evolving. I remember 3 years ago looking at some of the technology, and what I see now, the significant difference. In fact, there are vendors who are now feel like legacy technologies, and they were only there like 3 years ago. So that we have to be aware of as well. And then on the other example I'll give you is on the underwriting side. We are also starting to look at ways by which we can have our customers provide us images of their risk, whether it is their auto, whether it is the home, so that we can look at those images and try to underwrite based on that. Again, very much in evaluation stage, very much in pilot stage, just to understand if that works and for what types of risks does it work. So the answer is yes. Can you use technology? The answer is always going to be yes. The caveat is going to be, make sure that you understand the workflow, make sure you understand what data you're getting and how can you make it part of your decision cycle, if you will.
Brilliant. Thanks, SG. Great advice there. Uthra, anything you'd like to add?
I would say yes, it's the way of the future. Everybody wants everything yesterday, so it is the way of the future. Start now, experiment, figure out what your workflows are. There's no way we'll get very quickly to a point where you're going to settle a claim without even seeing if it's a catastrophe event. There's no way you're going to settle claims that quickly. But whether it's drones, it's self-inspections, I think that's the way of the future. Where I see the next set of advancements to come is with AI. It does a little bit of assessment to go, I'm 80% confident that the footage covers everything you typically need, so you can just assess with what you got. Or, it's a really old phone, or somebody didn't know how to use the app. There's a 30% confidence you can do it, which basically means, hey, get the adjusters to field adjuster, get in a car and jump down there. So I think the underlying technology of capturing is constantly evolving, but I think you got to layer it on with that intelligence aspect, which is a little hard to do. I won't say it's easy to do, but that the combination of the two is the way to get into the future.
Yeah, thanks, Uthra. And I think you mentioned the adjuster, and I think part of this, as much as we talk about the customer experience, is also the employee experience, right? How are we using technology to make our employees' lives easier, so they aren't chasing things up that perhaps they don't need or want to be chasing up on a daily basis, right? We can put more control back into their lives and help them manage and work more effectively. And so no, thanks to both of you for your comments there. And I think we are coming close to the end of the session. And Phil, I would just love to get your final thoughts perhaps on where you see technology having an impact here around greater transparency, both for the customer and for the employee.
Yeah, I mean, you guys have both made the points. It's coming. Pity the fool that ignores it. But you've also made the points. Insurance is an emotive subject, and people need to know at the right time that it's not just technology; it's them. So I think you can use it to sort of optimize certain processes and get to a decisioning point quicker. But I think there will always be a case for sort of still touching a customer, because in their time of need, that's what they want. Only in the time of need. They don't want you to touch them any other time. But in the time of need, when they need their house or their car or some, subsistence or something like that, I think having a human to sort of touch them and give it is good. But all the other bits around, sort of getting a claim or an underwriting process as far as it possibly can before a human might need to touch it is the way to go. And I'm a fintech businessman, so I'm all about technology.
Brilliant. Well, I want to thank all three of you for your time today. This has been a really terrific discussion. We had some good questions there. We had lots of questions that I think still to answer, and I think that's a great reason to come back and do this again. But obviously we are seeing technology impact the customer experience, and I think one of those takeaways is that find the problem, that source of friction to solve, identify it, and then figure out how to use technology to solve it. And obviously it isn't a one size fits all. It's a measure of people, process, technology, and data, and trying to figure out where we can still deliver compassion and empathy, but still turn to automation when and where it's needed. Yeah. So
compassion and at a lower price point.
That's right. There we go. All right. Thank you, everybody.
Thank you very much, guys. Lovely to speak with you.
Thank
Cheers,
you.
guys.